Good afternoon from here, guys. So I took another live trade on synthetic indices. VIX51 is one of the most volatile pair that we have on derived broker synthetic indices. So right here you can see live trading and using the minimal lot size because it is very volatile. So we're applying risk management right here. So derived server to hedge real account. Another proof is that look at it right here. We have a real server. Okay. So how did I get to execute this trade? So I will zoom and we will do the analysis together. So yeah, starting from the monthly chart, like I always say. Now from my monthly chart right here, I'll delete all this, then I should hide my entry so that I won't make mistake to tap on it. So yeah, all right. So okay, I will start by deleting everything. It's kind of stressful though, but I'll delete everything to show you guys. So property, we go to object list, then we list all, you mark, you delete. All right, so I have to delete all this. So now the analysis and also knowing the algorithm, the buyers and everything, we start from the monthly chart and we can see that we have some little bit of consolidation right here. But then you should know that the origin of the breaker structure started from here. So we have a breaker structure at this point. So now when we have a breaker structure right here, we look for our area of demand, and this order block, we have a bullish order block right here. So the bullish order block is our monthly area of demand where we'll be expecting price to buy from, right? So I color that blue. Now after seeing our breaker structure right here, what are we to conduct again? We have to conduct some kind of like a liquidity assessment. Now you should observe what happened here. Right here the market be ranging, and actually you will know that these stuffs right here are not actually breaker structure. They are just price grabbing liquidity, right? We are not experiencing a breaker structure right here. So price has been using this week to grab liquidity, resting on this high. We're having buy stop on this high, and we know the origin is the breaker structure is from here where we have impulse and we have the last sell responsible for the impulse. So now our liquidity assessment is that we are having a fake out zone right here. All right, we're having equals, so we have our area of liquidity right there. So the idea is that the price should come to grab liquidity and use that liquidity to activate the orders. That's why it's called an order block. To activate this order, and we might see it to find a confirmation entry to buy this price and targeting this high. Now me having the idea the price might want to trade back lower to this area of demand, I have to look for a sell entry down to that area. So after seeing all this, I run down to the weekly chart and I noticed that we do not have a breaker structure right here. What we actually have here is a stop hunt, right? So price grab the liquidity right here, trading lower, and we are having sell stop resting on this low. So I could be targeting this area as take profit, or the imbalance as take profit, or still try to hold the price down to this area of the monthly order block. So saying that, I ran to the daily chart to have a clean entry. So right here the stop hunt occurred right here, and I saw price trade back to demand supply flip. So demand was violated, supply was formed, price tapped into that area of supply, and we see trade lower. Now as we see trade lower, I mark this out as what? I mark this out as a breaker block, all right, or a mitigation block, because this candle here is like a form of demand. So marking that out as a breaker block, and we see a breaker structure right here. We now see price broke structure right here, violating a demand. So if we run down to the lower time frame, we will see that. So breaker structure occurred here. We're having a breaker block or mitigation block. So 12-hour time frame, this is where we had it, right? So since it broke this high right here, in which I won't call this a structure, but it's a structure also. So we broke this high, price traded lower, violating the demand, right? And it's still traded lower to take out this demand here also. So we're having two areas of demand was broken. So we have break of structure right here and another break of structure right here. So now price tapped this area of demand, traded higher to the breaker block, and we see trade lower to break structure. Now this gives me a confirmation that price might not trade to clear this imbalance, since we see mitigate a breaker block and still break structure. So now I am to look for area of supply at this area. Now I keep running down to lower time frame, doing my analysis. So trading supply and demand, this bearish order block and liquidity assessment, we have them right here. All right, so we now have break of structure right here, and this demand was violated. So from the 8-hour run down to the 6-hour right here, remember other block that was violated is a breaker block. Price mitigated our breaker block, and we see it sell lower, leaving behind the supply right here. Okay, so liquidity assessment, always have your liquidity assessment for price to grab. So from there I roll down to the 4-hour, and the 4-hour I can see a clean area of supply where I have my other block. Okay, now an extra confluence is that you might see this as a QML right here. So we have that right here, and from 4-hour keep refining to 3 hours. 3 hours we saw area of supply right here along with QML. Keep running down to lower time frame, we have the 2-hour time frame, then we have our bearish order block right here, and the last candle and area of supply we have QML. And still running down to the 1-hour time frame, trying to find a refinement, we have this area right here. And the most interesting part is that we are having significant support and resistance, order block at area of support and resistance, right? So I indicate all this. And also right here we have support, we have resistance, so we're having SSR. But the most interesting part is that we're having MPL right here. So I mark this, but then it's not that clean. So run down to the 13 minutes, and right here we have our MPL, the area of supply that I sold from. Now we have supply, we have support, resistance right here, significant support and resistance. Now it turned to a maximum pain level, right? We have this model candle traded lower, and we see it have an internal structural break before we have the external structural break right here, the major break of structure that we're having here. Sorry, I'm talking too fast. I'm trying to make a quick video on this. So we find down to 30 minutes, we have our area of supply right there. So assessment, we have liquidity right here. We have liquidity assessment resting here. We do also have another liquidity assessment resting right here. So price to grab liquidity on these highs, clear the imbalance, tap our maximum pain level, area of supply, the broke internal structure, and the major structure right there. So it is just simple. We have maximum pain level, significant support and resistance, and your supply are your area of significant support and resistance. We still have to mark this area right here to intensify that we are having a QML right there. So yeah, okay, so we're having QML right here, still significant support and resistance. Okay, so I don't know, their PDF file is popular. I don't know if you have read that, but you should, I advise you can learn from that. It actually teaches something interesting right there. So right here we have an area of significant support and resistance before the maximum pain level. The area of supply was formed, and we see the engulfed candle. You can see how the price engulfed the previous candle, and we see trade lower. That is how to identify your order block. So yeah, and we can see price tap sniper, and we see trading lower. So yeah, thank you guys for watching. Make sure you subscribe, leaving your notification to always have my updates and stuff like that. Thank you.